Good morning. Today is July 7th, 2024, and this is the weekly Bitcoin price forecast. So, looking at where Bitcoin went in the last week and where it could potentially go in the future. So this was a rather down week. The entire first week of July was pretty much just straight down. I'm gonna be honest with y'all, I did not expect that big of a dip. But I will explain why it's not super concerning. Usually at the end of a major move, you start getting, whether the move be up or down, you start to get very big candles. So you see, it's like you start out slow, and it gets a little bit faster. And then by the time you get to the top, you have like these big candles. And then you may have like these dumps and whatnot, but like usually at the end of a major move, like you see this big exasperated candle right here, followed by several smaller candles, which led to the start of the bull run. So let's say that we started here, and then we ran up for all of 2023. We had a pretty much a 6-month stall out period right here between March and August of last year, and then 7-month run up, and we had a 3-month run up. Well, actually like a 3-month stall period. So it ran all the way up in March and hit a peak, a new all-time high. April, May, and then June, it pretty much spent in a range. So really all of Q2 was spent in a range, and then it came out the gates on Q3. July 1st, just taking a major drop all the way down to about 54K. And you see it kind of came back and settled around 58. But again, in my mind, that's fine, because again, this was a downtrend, and we'll look at it a little bit more on the weekly chart. But I'll show you how this was a huge exasperated candle that's pretty much poised to turn back around. And we'll kind of look at some of the other different news around the world and whatnot, because there is quite a bit to talk about. So I'm going to go ahead and get through this. Okay, weekly chart. Like I said, this was very much so stuck in a range for a while. So like all of this area right here was a range. So we hit this new all-time high right here, and then just kind of danced between 62K and 70K. And then, at the beginning of July, there was this huge move down to here. And really all it ended up doing was kind of almost touching the top of like this potential demand zone right here and cleaning up all this liquidity. I actually believe that it could go a little bit lower. Potentially, I don't want to rule that out. We have to talk about the bear case and the bull case. So let me turn the drawings on. And we have a couple things right here. So I said we danced between about 60K and 72K, and then your all-time high being right here at 74K. So we finally got a weekly close below this level right here. So this was your $60,000 level that served as a pretty strong support level. And then it did actually breach that level right there. So that's the first weekly close that we had below 60K since actually the first one that we've had below about 62K since, I don't even know. Yeah, it's been several weeks, several months. But this long-term support that I have here, it's a couple things on the weekly chart, right? You're about to run into the 50 moving average. You're about to run into this long-term support. And where this long-term support comes from is basically, if I go back all the way to 2021, there are certain areas where price has a tendency to turn around. So you start here, okay, boom, we came down here, price stopped here. It bounced up. It didn't really do too much of it. Well, actually it did. It did a little pause, it bounced up here, and then broke through to the bottom. Okay, try it again. We ran through to the top, didn't quite do it, bounced back down, and kind of broke through. It kind of paused right here, came back, hit this thing one more time, and then that was it. It was over, game over after that. We even got here, and this is around the time that the ETF was introduced. Ran up right here, couldn't quite break this, and then in February, it just kind of ran on a tear. Ran on a tear from there, and then really broke this long term. So this was, when price was below this, I actually had it red. This is long term resistance. So now that resistance has flipped support, it could potentially come back down to 49K. Like that's not outside the realm of possibility. I've had this long term support marked out for months at this point. Probably way back going over here in 2023. But it's good to see. We'll see if that actually holds. But who knows? Daily chart. So this is, you could almost draw a downward range, or you can draw a downward range right here to where your tops kind of meet. And let's kind of angle this up a little bit. Let's see if we can pull that down. So somewhere around here. Actually, it might be a little bit easier on the weekly chart. So you have these peaks. You have these bottom peaks here. Yeah, I think that's about good. That's about as good as you can get. So you have up, down, up, a double top, and then all the way down to the bottom of this channel, which adds another level of potential. Hey, this could turn around here. And one good thing that I see is that you have like this candle right here. This is like it's a some people call it a kangaroo tail or like a hammer. It's when you have something that makes an attempt to go down and doesn't quite do it, and you end up like this with this small body on the top, and you have like this large wick of a tail. So in my mind, that's pretty bullish. Going back up to the upside. I think this was a final shakeout to get all that extra liquidity at the market. Like the market needs liquidity in order to move. It needs so if they sell it down and people are wanting to buy, so if they sell into all these buy orders, they're hitting all types of stop losses. If they have buy orders, they have to end up converting those. So this is the last attempt in my mind to kind of shake stuff out. Like I said, it could go all the way back down to 49 before completely turn around, but I don't see that being super realistic. I mean, let me see. We've already gone down to 53. There's a bit of a demand zone right here. Like if I draw this, if I draw this whole area, this was an area of consolidation previously. So you have not only the big long-term resistance, but you have this one too, which makes it a little bit more, I guess, less likely that you actually go down too much farther than about the 52 range. But again, all things are possible. Not all things are probable. We'll have to see. You never really know until it kind of happens, right? So I think that's the majority of what I have to talk about on this chart. And like this is kind of like the what's happened last week, but I also kind of want to talk about the why. So let's look at a couple things. Nope, I don't need that to open. So this is the Bitcoin spot ETFs. If we look at it, it came out the gate in June just doing fantastic. One of the biggest days that they ever had, almost $1 billion on June 4th. And then it really just kind of slid off into nothing. So like the rest of the month was pretty much net negative. If you add all these up, you're probably net negative, through these weeks. A little bit of peak up here, but just like overall net negative. So not too much on the ETF front. Let's look at the news from last week. Not a whole bunch of news in the last week. The big one was the non-farm employment change. So that was actually positive. Good relative for the overall economy. If you have a positive NFP that beats expectations, so it beat it by about, I think, about 20,000 or so, 15,000, 16,000, something like that. Not too much there. Let's see what the news is for this week. You had the FOMC meeting minutes come out to where they basically said, I can't remember. I have to take a look. Fed Chair Powell testifies. He's going to be talking a lot this week. And then you come out with the inflation numbers. Right now, inflation is sitting at, last month it was 3.3%. They're projecting a 0.2% decrease, so down to 3.1%. We'll see. I mean, hopefully it meets or exceeds that. Maybe you even see 3.0. Who knows? Basically, they need to see these inflation numbers come down before they start cutting interest rates, because like it would be semi-counterproductive to do it too soon, because then you just send inflation back roaring. Their goal is to get down to about 2% inflation year over year. But we will see. We'll see how that ends up working out. Friday is your PPI. This is month over month, not year over year. So your producers index, not nearly as important as CPI, but definitely something to look at. So, let me see. Previous, it was negative 0.2%, and it's projected to go up to 0.1%. So a little bit more expensive, potentially projected for the producers. But I'm really paying attention to CPI over PPI. This is, I don't know what this is. Okay, this is a little banner. This is okay. So we talk about some other news as well. One of the big things that people were scared about this week was Mt. Gox. Mt. Gox it's an old Bitcoin hack. Like you see, after a 10-year wait, Mt. Gox Bitcoin is finally being returned. So they have approximately, I want to say, about 140,000 Bitcoin that they need to return to their creditors or people who they got their money taken. That, in my mind, is not super scary, because like if I look at it, if I'm being given let's say 5 Bitcoin, the average person there has maybe 5 Bitcoin. I have no idea what the people are getting back. If I'm given 5 Bitcoin on July 7, 2024, and I'm looking at the chart, I'm not selling at that point. Just because, again, everything's set up for the bull market. So I think there's a lot of fear behind people like, oh, well, they're going to get all these things and sell immediately. They've been waiting for a 10-year payday. That is true. But also, given the circumstances right now, I don't know if they're going to do that as immediately as people think, or even half of it. So like the other one that we're looking at is Germany. Germany, I think they've got about like 42,000 Bitcoin on hold, and they are looking to sell that. They're looking to get a payday. They're looking to sell that. But there's a lot of German lawmakers and people who are basically trying to urge the government to keep that supply as a strategic reserve for Bitcoin. I mean, you're starting to see a lot of nation states start to adopt it. And Germany being one of the G7, I think they're G7, I can't remember. One of the major developed nations in the world, you would think that they would want to have some type of reserve of Bitcoin if this thing really goes as galactic as people are projecting, right? So yes, you do have lawmakers who are, kind of urging them to do that. But if you add all of the Bitcoin up for Mt. Gox and Germany, and even if you want to include the U.S. in there, so I think the U.S. has about 200,000 Bitcoin that they hold. If you added all those up and they all sold at once, they would only account for about 2% of the total supply of Bitcoin, which is, pretty significant. But it's not enough to sink price in any type of measurable way for long. And the thing is, there's a limited supply. So like, they're not going to sell everything that they have all at once. Like that would dump the market temporarily, and it would cause quite a bit of fear. Maybe you see some consolidation for months, but that's not, that wouldn't be in anyone's best interest, I don't think, at this point. I could see some potential, like, I think a lot of this stuff started getting released all at once because, again, I think this is a fear campaign right before you have one of the biggest launch offs that we've seen in this bull market. A bear trap, if you will, to be able to look at this and say, like, okay, well, we're going to shake a lot of people out right now, and then we're going to go ahead and just send it to the moon. That's what tends to happen. You get that one final shakeout, maybe a week or two of consolidation, and then just absolutely goes ballistic. So, yeah, like I said, Germany, Mt. Gox, United States. The United States hasn't said anything about selling just yet. I don't anticipate them doing a large degree of selling because I think they understand globally that this is going to be something significant and they want to have their hands in it. Yeah, that's about it. The only other thing I want to talk about is the cycle. So let's go back all the way back to 2017, 2016. Do a weekly chart. Oh, that's very ugly. Okay, let's zoom in a bit. So this is 2017. 2017, 2016, the different bull runs. So if we look at how a bull run progresses, you usually have a huge move, let's say 200% up, and then you might dip 30-something%, 40%. Then you run up 174%, and then you might dip 40%. And then you run up 149%, and you dip 30%. Then you run up 250%. So obviously these upswings are so much bigger than the downswings. And like the downswings are getting less and less severe over time. So 37, 40, 30. Okay, well, that's getting less severe. That's, and of course, like the higher the actual price of Bitcoin, the more you're going to have to do to get a 40% drop. Let's move on to 2020. So you had a 213% move off the bottom. And then I think this is COVID right here. Yeah, it dropped for COVID, and then you had a 200% rally immediately after. You had a 20% drop, and then a 323% drop, and then a 323% run, 31% drop. 119% run. All of these things adding up, right? So you have, again, I said these moves are getting less, these down moves are getting less and less severe, but also the up moves too. But like 20% drop, 31% drop. That brings us to current day. You had the 2022 slump, and then from the bottoms of 2022, late December or whatnot, you ran up 80%. You had about 6 months of consolidation here, but that was still all within a 20% drop, right? It was within a very tight range. And then it ran up 191%. Now you have a 23% drop, which again, they're getting less severe. That's the sign of a maturing market. If a market is maturing, then you're going to see less volatile movement, again, on the upside and the downside. But right now, we're still in that regime where if you have this move, you can expect the next move to be, I don't know, what's the difference there? Like 191 that's like an 800% difference, an 8x. No, that's higher. That's like a 9, almost 10x difference right here off the lows. So if, 10 to 1, literally 10 to 1 risk to reward ratio. So if we just take this right here and pull it to the bottom of there. Yeah, that's like a 7 to 1 risk to 7.7 to 1 risk to reward ratio. That's a great trade, especially if you got some cash on the side. So just something to look out for. Like, this is a weekly chart, so like these things last for, this may be like a 6-month move right here. 182 days, yeah, about 6 months. Then this will be, and then the thing is too, as you go up on these, the moves get steeper. They get quicker in that sense. So I'll get rid of this. The moves get a little bit quicker in this sense to where it's like, okay, this is going up. Now we have a steeper move. Now we have a steeper move. So when things start getting steeper, the amount of time that they can spend in consolidation decreases as well. Again, I'm not worried about it. I actually really want it to, go ahead and flush down to this support level so we can go ahead and get this over with and stop dilly-dallying around with it. But again, we will see. Time will tell. I'm excited. I'm still always excited about this stuff. Even when things are boring, you got to be excited. So again, this has been Chris Talks Crypto. Check out any crypto-based resources on christalkscrypto.com, and I will see y'all on the moon. Take care. Bye-bye.